COVID-19 has triggered unprecedented lockdowns across the world, resulting in a demand-supply shock across industries. That's not all. The pandemic is also likely to have a long-lasting impact on consumer behavior. One area that will witness this change in behavior patterns is transportation. The future of mobility looks very different now than about 2 months ago, where we'd seen a big shift towards shared mobility and a push for public and sustainable transport. It now seems the tide is turning. People are prioritizing their health and avoiding crowded mass or shared transportation. According to an ING report, COVID-19 will leave its mark on mobility behavior and see a temporary reversal of the upward trend in car sharing due to social distancing. So what does this mean for India's buzzing EV segment and electric vehicle sharing platforms? Will this transformation in consumer behavior mean more cars and bikes on the road? Could this be a make or break moment for individual transportation with electric vehicles leading the change, or has the pandemic further kicked the EV can down the road? Hello and welcome to Young Turks, India's longest running show on startups and entrepreneurship. I'm Shireen Bhan, and joining me today to talk about the impact of the COVID pandemic on the EV industry and the road ahead, Anand Ayudarai, the CEO of Vogo, Tarun Mehta, the co-founder and CEO at Aether Energy, Amit Gupta, the co-founder and CEO at Yulu, and Vivekananda Halekere, CEO and co-founder of Bounce. Gentlemen, thanks very much for joining us here. We've got pretty much the entire EV ecosystem covered. Tarun, let me start by asking you, what's your situation at this point in time? First, just give me a status check on whether you've been able to restart operations. Where does manufacturing currently lie for you?
Oops, just realized I was on mute. So saying we began our manufacturing operations last week. Our offices have been open for a couple of weeks now. So has our retail been open, both in Bangalore and Chennai. So finally, everything's up again. It's a slow start though. Our manufacturing is not at full capacity, as just gotten started. Office is only operating at about 15-20% of the staff. Retail is already at about 50% of the capacity.
So, Tarun, you're saying that you've started manufacturing operations just last week. What is the current capacity that you're working with? What's the big pain point? And more importantly, what's the demand outlook? Are you starting to see inquiries coming in? What's the situation?
So, on the demand side, Bangalore has been the fastest to recover. We are seeing good demand, not pre-COVID levels yet, but fairly close to it. I would say at anywhere between 60-70% of the pre-COVID levels. Chennai is yet to start, but that's also because retail's just opened there. Across the country, however, this is the year when we're expanding, so we don't have retail outlets open in other cities. So demand in other cities is right now slow, and only as we get more test rides going in those places, I think it'll rise up. Production side, we are at about, I would say, probably going to be operating at 30% capacity for a while. Hopefully, it should touch 100% in about 2 months' time.
Okay. 100% in about 2 months, that's your expectation. But Tarun, what's your own assumption? Is COVID going to, in fact, make that shift towards personal transportation? We had seen shared mobility gaining ground, but do you believe that we're now going to move to personal transportation? And more importantly, are we likely to see that shift take into consideration electric mobility? Because look, you are more expensive and people at this point in time are worried about their finances.
Right. So, two things. First, I think I think our customer base is strong, and for them, especially after what they've seen in lockdowns, environment has become an even bigger factor for their purchase decisions. So I think that segment holds strong. Second, I think a trend that really gets accelerated because of COVID is the topic of alternate ownership models. So this is something we at Aether have been particularly excited by. We were the first one to introduce leasing in the country. We were the first ones to introduce subscriptions on the vehicle. We're the first ones to have battery on leasing. And we do believe that for electric mobility to take off, especially on personal mobility side, we need to get beyond just traditional EMI models. There are different ownership models that exist, whether it's leasing, whether it's short-term rentals, and all of them play a very good role. And I think what COVID has done is it is going to accelerate all those experiments, and it is going to accelerate more and more adoption via these channels. So I'm bullish, and it's happening for us. I think a phenomenal amount of time and energy is going into opening these new channels up for us. And I think so is going to be the story for most TV buyers, most TV companies tomorrow.
Okay, so you believe that alternate ownership will gather more steam, whether it's the leasing model or the subscription model. Anand, let me come to you now. What is the report card as far as you're concerned? I believe you've also resumed services in Bangalore. What is the situation that you're dealing with on the ground today?
So we restarted our business about a month back. At this point, we are back to around 30% of demand. So I think during the lockdown, our hypothesis was that post-COVID, this would actually be an opportunity for shared mobility, given factors around social distancing, that people would prefer this over most other modes of transport. To me, the last 3-4 weeks are actually fairly strong early indicators that that is actually playing out. If you are going to ride a vehicle yourself and share it with multiple customers over a month, rather than share it with a driver or a co-passenger, will customers feel more comfortable? So that was a fundamental hypothesis. It is starting to play out. So as of now, we are trending to at least a 3-month kind of recovery period in terms of what we would have been pre-COVID. So Bangalore is actually trending much, much
so
better.
you're...
Yeah. Hyderabad today obviously is still under lockdown, so we expect Hyderabad to pick up.
But, you know, given the fact that we're now probably headed into lockdown 5 and we don't know what individual states are going to do in terms of lifting restrictions, etc., you know, how hard does that make your life, and how are you maneuvering these complexities with differences playing out across states?
So for us, I think, right now the expectation from the government is that it will continue to be a containment zone driven solution rather than a city or a state level solution, which is that parts of the city will be locked down. So maybe 5% or 10% of the city is locked down at any point in time. So that's something that we've built into the risk in our business plans itself. So for example, this happened just a few days back. One of the zones where we were present in Bangalore became a containment zone. And so that 5% of the business that you get from that containment essentially went away, right? So that is something I think as a part of, it is the new normal. For the next 1 year, we should expect some sort of volatility at a zone level. But as long as cities are open and running, right. Even 10-20% of people are actually moving around. What would they prefer today in terms of mode of transport? So our belief is that shared mobility, especially when they are riding themselves, is something they would prefer. We've done a whole bunch of stuff so that customers are more comfortable with the vehicle in terms of sanitizing the vehicle. If they don't want to step outside to get the vehicle, delivering it home, giving it to them for longer periods, which is 7 days, 15 days, 30 days, and so on and so forth. And those are the kind of things which are actually showing a lot of traction today, where customers are thinking that you keep it with you for a day, for 7 days, and so on and so forth. That's a product which will be far more comfortable than a point-to-point mode of transport today. So for us, this is an evolving solution, right? So over 2-3 months, my belief is that customers' perception of risk will actually reduce. And over a period of time, they will be more comfortable with point-to-point solutions as well. So that's broadly how we. So some of these products actually been launched.
Yes, you're absolutely right. Uncertainty and volatility. I'll just come back to you, Anand, in just a second. So you're right that uncertainty and volatility is the order of the day. And it's interesting that you speak of the rental duration being extended while this idea of self-driven shared mobility is gaining ground in this COVID period. Let me bring Amit into the conversation as well. Amit, what's the experience at Yulu? Would you agree with what you've just heard from Anand? Are you also seeing similar experience?
Did our service on 4th of May when city was allowed to act at 33% from private companies. And for us, the demand side actually have picked up pretty well. We are seeing 65% of our recovery already from our February numbers. And reason has been the same, which Anand is also talking about. People are finding self-driven two-wheelers to be safer mode of commute rather than getting into an auto rickshaw or taxis or for that matter public transportation. And unlike other businesses, what we are also seeing that people are comfortable taking our bikes from A to B. One of the advantage which we got, because there was no shared helmet, we were able to run the business in the network model the way we have been running it. And we also did an internal survey where we found out that 70% of our internal users they were okay taking the bike from one spot and take it to the next one and leave it like that. At the same time, there were almost 25 to 30% users who were not comfortable with the same mode. And for them, we also introduced long-term rental. So now as a user, you have a choice of just using our bike for half an hour, again, point A to point B. Or if you're not comfortable or you live in some area where Euro service is not operational yet, you can take our vehicles for a week or 10 days or a couple of months.
But just in terms of plans for 2020, I mean, you had a target of 1 lakh EVs by December 2021. And given where things are today, I think it's too far out to be talking about forecasts for 2021. But what's the assumption that you're making now in terms of plans for this year, Amit?
So clearly that 100,000 vehicle mark, we actually have to push it for 2021. Looking at this whole COVID situation on the supply chain and also funding side. So in general, you want to make sure that everything is now there before we make those commitments into the asset. As far as 2020 is concerned, we are looking at deploying 50,000 vehicles on the road towards end of this year. So we are on track for that. And certainly 2021, we think it will be even bigger. And for the trend which even Tarun spoke about, that we have been talking about India mobility being defined by two-wheeler, electric, shared, all of the tenets about the new mobility as we say. And because of COVID, this whole entire phenomena has got fast track. So that's our belief that people will be going towards electric mobility. Earlier they were thinking twice, but now that's going to be the new norm. So
okay,
we feel
that's
very
certainly
excited
the hope
about
that all of you have. But Tarun, I'm sure that you're feeling excited and you're hoping that this is going to result in more electric mobility. But let's get a reality check, Tarun. And the expectation was that the new FAME policy would accelerate the move towards electric mobility. It hasn't played out as per expectations. Now, what is the ask as far as the government is concerned that you have? And both in terms of cost escalation, given the supply chain disruptions, do you anticipate a significant cost escalation? And what will that mean then in terms of consumer prices?
Two things here. First, unlike some of our other contemporaries in the space, it is strongly believed that the FAME 2 policy has been on point. It has decimated the lead-acid-based sales, which was, I think, a point of the policy. And then it has discouraged really low quality vehicles, which were largely imports out of China. It has also incentivized and focused on domestic production and domestic technology. So you would see last year, a significant part of the prior market that existed in electric two-wheelers was phased out. And despite that, the electric two-wheeler industry still grew. A policy like FAME 2 and anything in manufacturing takes a couple of years to mature and show results. So it's been not a long enough time. I think this is the year FAME 2's results will start coming out. Companies like ourselves will start showing volume only now.
Okay.
So I think FAME 2 has been on point. B, on supply chain disruptions, actually, ironically, all the supply chain disruption is in India right now. Primarily for us, we are only importing lithium metals. And almost every Asian country out of which we can tap the markets, they are all open now. Our problems are more because our domestic supply chain is stuck in red zones right now. And also, if anybody right now says that they're unable to import batteries or motors or controllers, you're not supposed to be importing battery motors and controllers because FAME 2 explicitly bans those. So I think supply chain disruption from China is likely going to hit those hardest who were primarily importing complete knockdown vehicles to India. Domestic manufacturers, and there are many of those now, are not going to be long-term impacted. There's a 2-3 month disruption because of lockdowns in India. Otherwise, supply chain disruption is I don't expect it to last beyond another maybe 45 days.
Okay, you don't expect it to last beyond another 45 days. But what about the runway as far as funding is concerned? How comfortable are you? We're seeing news coming in of layoffs, retrenchment, furloughs from across the startup ecosystem. What's the situation as far as Ather is concerned?
So obviously, the COVID-related disruption has meant that all of us have to go back and redo our annual operating plans. All of us have rethought our budgets completely. And I think that's true across every single startup out there. So did Ather. So we brought in a lot more focus. We had multiple vehicle programs running. We really focused them down to one vehicle. We are focusing a lot more on operations improvement as opposed to new technology development. And that's the order of the day. So on the funding side, we've been lucky to have some really strong investors, and they continue to back us. So I think we're good for now. And as sales grows, hopefully by the end of the year, the results really come in. I don't think funding is going to be is really a big challenge. Obviously, this changes the equations, but liquidity is hopefully not going to be a big problem.
Well, that's good to hear. So you're going to focus very specifically on the 450 and other plans are going to be put on hold for now.
Yes.
Okay, let me get Vivek into the conversation, the CEO and co-founder of Bounce. Vivek, how's COVID, how are the COVID times treating you? Have you been able to get back on your feet as well?
So I think COVID has been something which nobody has faced before. So it has hit all of us, and mobility is the most hit, right? As in the people are not coming out, there is no need for commute. Though demand is coming back, I think still a lot of people have the discretion of not getting out from their houses. So the demand is still not the same. But I think given the situation that we are in, when people will prefer safety over anything else, and as you know, the public transport was superly strained. I think more and more people will move from public transport and even cabs and auto rickshaws to driverless solutions. And I think, fortunately, people in the panel are on the driverless solution. We, Vogo, Yulo, all of us have a solution which doesn't have a driver. So theoretically, we should have a lot of tailwind, but we'll have to wait and watch out on how consumer really behave. But this access to funds also will be a challenge. So ownership might not take off like how it took off in China, but alternate ownership models should take off. We and Ather recently announced a peer-to-peer sharing platform as well. So I think now, like Anand was mentioning and Tarun was mentioning, I think everything will accelerate now. Now every company will try to be efficient, which means electric might take off pretty well, and also alternate ownership models like subscription and lease also should take off.
Yes, alternate ownership models will take off, and you're absolutely right. This panel is on the driverless solution model, so that is what their hope is, that will accelerate much more given the kind of fear that we are living with, and consumer behavior is likely to change. But Amit, to the point that Tarun was making, you know, in terms of redrawing your plans, you talked about how you're pushing out the expansion plans to the end of 2021. But what else are you doing to rescale, redraw, reshape the plans that you had?
So certainly, as I said, that we have seen the week of recovery, and not only in India, but if you look at other cities in the world, wherever the lockdowns were open, these kinds of e-bicycles or bicycles, they have been preferred or recommended by the city. So we are also taking a policy route where we are trying to nudge the city authorities, where we are saying that, hey, if you can create a dedicated infrastructure for e-bikes and bikes, so people will stay away buying their own new vehicle, which is actually good for the cities. Otherwise, we'll basically move 10 steps back. Our cities were already crowded. So certainly we are making a lot of push on that front. From electric mobility perspective, what we have been doing, I think we'll continue to do more. We feel that the form factor we have got, which is light and easy, comfortable, and also robust, gives a great unit economics also ultimately to the business. Those all components, I think we have been finding very useful. So there's no change per se. Only thing which changes is a little bit pace, and I think it's linked with what we also mentioned, that the amount of funding which was available before COVID and right now is a change. And rather than, there was a mad rush of deploying money, investors are much more frugal. They are looking for unit economics, profitability, etc. And we want to make sure that we commit to that plan where we get comfortable for ourselves and then to the end investor before committing to a large size deployment the way we were looking at things earlier.
So would it be fair to assume that at least for the near future in 2020, the focus will continue to be on Bangalore, Delhi, Mumbai and Pune? And you raised about 16.5 million from investors like Bajaj, etc. So at this point in time, okay on cash?
We are doing well on cash. Good part is our business actually has been generating money. So we have been operationally positive from last almost 9 months. And we basically got money back in December just before this COVID thing happened. So we are sitting very, very strong, at least on the runway front. And as far as the cities are concerned, you are right. We are actually going to focus mainly into the big city. We believe that the problem as a company's vision, which is traffic as well as pollution, they're all there only in the big cities. So let's take them up, solve them really, and then we'll figure out how to grow in rest part of the world or rest part of the country.
Okay. Yes, so I would imagine that most companies will be looking at their expansion plans very carefully given the uncertain environment. Anand, back to you. The same question in terms of funding. How are you doing at this point in time? Matrix, Stellaris, Kalari, Ola, a whole bunch of investors that you have on board. And in terms of what the ask is from the government, and I know that each one of you has been pushing the cause of a GST rate cut. I don't know if that's going to happen or not, but I know that is the consistent demand that's been coming in from the ecosystem. Outside of the GST rate cut, what else is it that you expect or would like?
Got it. So let me first address the question around fundraising. So I think we got very lucky that we had a Series C round of funding happen just 2 weeks before COVID hit. At the end of February is when the money hit our bank. This is from LGT Aspada, which is an impact fund. One of their mandates and one of the things that we are looking to do with them is actually make EV a much larger part of our fleet. So that just happened, which gives us sufficient amount of cash from a runway perspective. The second piece around what we would want for the government, I think, so GST is actually very important for us because that just happened 6 months before COVID. So till then we were at a lower GST rate and the GST rate suddenly increased. So in my mind, given that this is the most affordable solution, it needs to be the lowest from a taxation perspective. The second thing I think is something that everyone has been asking for, which is the economy needs to reopen. People need to go out there again, and whatever the government can do to facilitate that, particularly from the demand side. So most initiatives over the last 3 months have been focused on the supply side. So whatever the government can do from the demand side to facilitate people going out there and owning their livelihood, to me, that is something which will matter for us collectively.
Yes, demand side measures is the big ask across industry and of course lifting the restrictions that come with lockdowns. But Vivek, over to you now. What are the kind of questions that consumers are asking as we talk about this alternate ownership models? What are the concerns that they raise? Do you believe that this, once this initial sort of phase of uncertainty and volatility is over, this is going to be the future?
I think the challenge is the uncertainty, right? So nobody is clear on when the whole COVID thing will end. So people are not sure whether it's going to be a 6-month problem or is it going to be the new reality, right? So that's where a lot of confusion is coming from. And people just want to wait it out. As in when they want to try out new forms of asset ownership, they just want to wait it out. And also, I think as humans, we are all flawed and we are very optimistic, right? We all think probably it will end very soon. So that also can be a factor that people might not think that this new reality is actually real. So I think it might take a couple of months, probably a quarter, for people to realize that this is how the world is going to be. And unless there is a vaccine, I don't think it's really safe for people to take risks. So I think people will get adjusted to this new reality in next 3 months probably. So the whole of the questions are coming from uncertainty on should we take some action from this? Should the consumer act now or just wait out? I think that is where the confusion for the consumer is. So most of them are just waiting and watching on this. And second, also the leasing model has never been pushed for two-wheelers in India, right? So when we talk about subscription or long-term ownership or rent-to-own models, people are not very clear, but what is helping them decide is the cash flow that they have to, they can budget for. So today, since everyone wants to not spend on discretionary purchases, they want to save cash for real things. So buying an expensive scooter, I know Tarun is here, but still a lot of them can't afford to take those decisions. That's where I think they will be interested in either owning one and renting it out when they're not using it, or probably come up with used vehicles or probably work on other ways of owning a vehicle. So I think it's a really interesting time where the industry around two-wheeler might really change post-COVID or even in the next 3 to 6 months.
Yes, I would imagine that these are going to be questions that consumers as well as companies like yours will have to grapple and deal with as we live through these uncertain and volatile times. But I wish you all the very best of luck, and thanks very much for joining us here on Young Turks and sharing with us where things currently stand with your businesses as well as the EV mobility plan going forward. Anand, Tarun, Amit, Vivek, always a pleasure. Thanks for your time here on Young Turks. We'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment.